Hey everybody, it's Mike from Orderflows, and hope everyone's doing well. I'm doing good, Daniel. Glad you can make it out for today's presentation. We'll get started in about a few seconds here. I'm just making sure everything is working fine. Looks like sound is working. I had a little pop-up. Literally, it always happens. As soon as you're about to go live, some little pop-up things comes up. But it looks like everything is working great. So we'll get started here. So again, I'm not going to try and make this some big, long, drawn-out sales pitch. Actually, what I want to do is I just want to show you guys the new Orderflows Trader 7. This is our last upgrade was Orderflows version 6, which happened in, I think, October of 2022. So it's about a year and a half since then, and we've added 13 tools to really improve the trading. 13 tools, and we've made some adjustments, two adjustments as well, to how the footprint looks. And well, one is how the footprint looks, and the other is an improvement, in my opinion, to the existing tool set that's already there. Okay. Rick, yeah, I saw your email. I've just been so busy getting ready for this launch of 7, I haven't had a chance to reply, but I'll get to that. Quasi asks, is this available on Go Charting also? Not yet. It's probably going to come later. Go Charting is the platform, what do you call it? The web-based platform. They've got a new, what do you want to call it? Some new connections coming out, but they're not quite there where I need it to be. They're adding CBOT, NYMEX, and COMEX, but we'll get to that probably down the line once all the other exchanges are there. All right, so let's jump in here. So again, you guys all know who I am. I don't need to introduce myself that much further, but just before we jump in, just a brief disclaimer again, this presentation is for educational informational purposes only. We are all adults, we're all traders. We know money's involved and we know the risks associated with trading. So just, don't risk money you can't afford to lose. And again, we all know who I am, but for those that don't, that are new here, my name is Michael Baltos, and I've got over 25 years of professional trading experience. I started in the 90s with Dean Witter Reynolds on the CME floor, eventually left the floor when electronic trading was starting. Spent 2 years on their Globex trading desk. That was like their night desk, where we could trade electronically. After that, I left to go to EDF Man in Chicago on their macro futures trading desk. I spent 2 years there, made some great friends there that I still talk to this day. And after that, I joined Commerzbank in Chicago as a licensed Eurex trader. I was trading Bunds, Bobbles, Schatz, DAX, Euro stocks against the US stuff at night. Then I joined Cargill. I ended up being the head of futures trading, or not the head of futures trading, but rather I ran the trading desk at Cargill in Singapore. I worked in Chicago, then the exchange in Singapore was closing down. They sent me out to Singapore to set up a trading desk. And I did that for a year before that division was sold off to Refco, which spectacularly went bankrupt 6 weeks later. Then eventually I joined JP Morgan, where I spent 9 years there, vice president of futures trading in Singapore. 2015, I started the Orderflows Trader software company. And the reason I started it is because, I was trading for myself after I left JP Morgan in 2013, and the software that was out there was decent. It was just basically a footprint chart, and analyzing order flow, there's things you go on to look for over and over and over. And so I met with the programmer and I said, hey, can you put these tools on there? I started with 4 tools, right? The ratios, basically what we call imbalance reversals, delta divergence, and 0 prints. Oh, sorry, 5, and exhaustion prints. So it's technically 5, but I really consider it 4. Those were the 4 or 5 rather tools that came out in 2015. Okay, and now it's 2024. It's almost 10 years later. We got about 32 tools that help traders analyze the order flow. But before I get into it, if you're a Ninja Trader, you got to be on the most recent version of NinjaTrader, which is 8.1.2.1. Okay, and you can find that by going to the NinjaTrader control panel, right here, and you're going to click on Help, go to About. You're going to get this thing that pops up, and it's going to say what it is. If you're not on that version, download it, okay, because the upgrade of Orderflows Trader 7. Now, if you're a first-time user to Orderflows Trader, you're fine as long as you have the new version. But if you're an existing trader, if you're using 6 or even a lower version like 5, I don't think many people are using 5, but I think there are just a handful. You're going to run into a problem. NinjaTrader is going to hang when you try to load Orderflows Trader 7, because when you open up the new version, right, and you have it on an old chart template, well, it's trying to do work on the order flow, so it's like calling up functions that's not on the template that you already have saved, okay, and that's just going to cause you a huge headache. So you really got to start with a fresh chart, and it's not that difficult. It sounds more work than it really is, but it's really not. And I'm just going to show you really quick. Okay, so here, right, I got NinjaTrader right here, right, and all you gotta do is go to chart, right? Click on chart. Okay, open up a new chart. Simple. Do E-minis. Make sure tick replay is enabled. Okay, and this is just this plain NinjaTrader black screen, right? The black chart. I don't understand that, right? I mean, we read books, I mean, or Kindle stuff. It's a white background with black text. So trying to analyze, I've never understood why they make their default like this. They should at least give traders a choice. But the good news is it's very easy to change. Okay, so there's a couple of things I'll change. First is I'm going to go into the candlesticks, candle body, candle wick. I do like to have that black because I'm going to be using a white background. So that's the first thing. Okay, simple. Takes 2 seconds to do. On a black chart, you can't see it, but when you change it to white, go to properties. So there's 2 ways to do it. You can click on the screen, pull up this, go down to properties, or go to Control T, okay? And I like the font size to be a little bigger rather than 8. I don't like to have to squint at my chart, so I make it about 16. I will add show date range, so I know, the date the day I'm looking at. Sometimes we're looking at stuff in the past and we're like, hey, when did that happen? And then you're going to change the color of the background, chart background under colors right in here. Very easy. Takes, to do this, if you've done it before, it's very quick. I like to make, the crosshairs black, not transparent. So chart background is going to be white. Everything else should be either black or transparent, and I'll tell you. Text, right? You're not going to use a gray text on a white background. It's going to be difficult to read, so you make the text black. The axis, which is the lines on the side of your chart, make that black, okay, black. Crosshairs, obviously you're going to want those to be black as well. I like it a little stronger, so 1 for the width, I just changed it to 2. Grid lines, some people like them, those are those lines on your chart. If you want them, fine, don't need to change it, but I just like to keep it transparent in the sense that it doesn't show up on the chart because it's transparent. And panel splitter, you can change that if you want to or not. If you run stuff on the bottom of your charts under the footprint, then it'll just have a black line. So that's it. Okay, so you got your white chart. All you gotta do is then just add it to a chart. Now, one quick thing here, so I'm gonna add it here real quick. Again, if you're a first-time user, you will need to enter your license token. You need to enter it here just once, then click apply. So that the footprint will go. If you're an existing user, you don't need to re-enter your license token. It'll work with your existing license token, okay? And give it a second. Now, one quick thing though, when I say open up a new chart, okay, what you have to do is you got to go into your documents folder, okay? Your documents folder, go to NinjaTrader 8, go to, where's it? Under templates, okay? Go to chart. Okay, you see mine is empty. I've cleared this out already. What you could do, if you have stuff saved like existing charts, you could just copy them and put them in another folder. Just create another folder in your documents. You can see I got NinjaTrader 8 backup. Okay, well, that one's empty right now, but if I was to copy it and save it, I would save it in here. Just, I just create a folder called templates, put it in there, because again, if you have anything in your chart templates, right, and you're loading up NinjaTrader 7 and you're already running other charts here on your screen, again, it's going to, because now that you've overwritten Orderflows Trader 6, it's going to cause a little bit of an issue because it's trying to read stuff. The new tools is trying to analyze the order flow, but the template is an old template. Okay, so you're going to need to just clear out your templates. You can just copy and paste them into another one as a backup if you want. I just deleted mine because I can start from scratch. It's very easy. See, very quick to set up a chart, right? Now the defaults, just really quick, the defaults in here are set up for an E-mini 1-minute chart, which is fine for most markets, honestly. Crude oil, gold, the currencies. You can start here with this chart settings, okay? And the only things that are enabled, not everything is enabled. We've got delta divergence is enabled. We have the prominent point of controls, order flow ratios, and you see here, and the value areas, okay? Those are the only things that are enabled right now. So it's a little slightly different than the Orderflow Trader 6, right? There's a few more things enabled, but we sort of narrowed it down to these new, this handful of tools, all right? Because again, you don't want to overwhelm people when they're getting started. Now there's the new indicators, okay? Let's talk about that real quick. So there's accumulation distribution, open point of control, aligned point of controls, order flow gaps, imbalance reload, volume decline, POC wave, delta tail, resting liquidity, vertical liquidity, delta breakout, retail suck, price action divergence, okay? And there are a couple of things, new things, slight, I'll say improvements, but one of the new updates that we've added is for the order flow ratios, okay? Let me just pull up the indicator settings here. Okay, so, in the past, every bar has a ratio, okay? And in the past, they would be colored blue if it was bullish, red if it was bearish, above the bar if it was bearish, below the bar if it was bullish. And if it was just normal order flow, it would be colored black. But we added a new feature in here called the text color for the regular ratios. Okay, so you have a ratio bounds high, a ratio bounds low, okay, 30 and 0.69. And so if it's above 30 or below 0.69, it's either going to be blue or red, okay? But if it's not, if it's just your normal order flow, it's not going to draw the ratio under or above, okay? So that was one of the things, a lot of people have been asking for that over the years, but I always like to have them on there just to get an idea of, because again, even though these numbers are what I use, 30 and 0.69, it wasn't like set in stone, okay? Because if a ratio came out at 29.8, which is below 30, is that to say that it's not a legitimate ratio? Well, that's a judgment call I'd like to make, okay? The same thing with 0.69. If it came in at 0.7, does that mean it's not important? Well, again, that's a judgment call you can make. Now, one of the other big updates that we've made, which is something that I like to use it a lot, is under the global settings. You see swing period, okay? And now with majority of all the tools, the existing tools and the new tools, you have a choice to enable the swing filter, okay? So for example, okay, let's go to the ratios really quick. Okay, if I were to enable this swing filter, okay, hit apply, it's going to look for ratios, or it's not going to look for, it's going to only highlight the ratios that appear at a swing high or a swing low over a 5 period. Okay, that's what that is, swing period of 5. So for example, right, let me get the crosshairs up. Here, this is a bearish ratio right here at this swing high. You don't see any other ratios coming in here, right? Because these are not at swing highs or swing lows. It would have to be a ratio that meets the requirements that's coming in at a swing high or swing low, right, of the period that I chose. Okay, so you're not going to see sometimes a lot of ratios at all if you're using a swing filter. Okay, because it's only going to be looking at swing highs, swing lows, swing highs, swing lows. Okay, and it's got to meet the requirement, for a bearish ratio or a bullish ratio. Okay, and you can see today in the E-minis, what was that? That was 1. Okay, so far. And this is, most of the day, it's just, when you start filtering things out occurring at swing highs or swing lows, obviously it's not going to occur as often, as opposed to not using a swing filter. And people are going to say, well, why do I got to use it? Well, you don't have to, right? That's why we give you the choice to use it or not. But something like the order ratios, I wouldn't. Me personally, I just use it separately. All right, so let's now that we got those two little things out of the way, let's take a look at the new tools. I'm not going to talk about the existing tools, okay? Because I've talked about those for years, right? Everyone's here because you're interested in the new tools. Okay, so what I'm going to do is just going to make this a little bit cleaner here. I'm going to turn off the delta divergence. I'll turn off the point of control. Well, I can turn off the ratios. I'll turn off the point of controls. Again, this is just a brand new chart that I literally just opened. You saw here, so I'm just using the defaults. But it's a little bit easier if you're looking at a plain footprint chart. Over the next few weeks, I'm going to be doing more videos, more trainings, showing you how to use these different tools. But really, what I want, what everyone's interested in from the feedback that I got is explain the new tools. Okay, so there's accumulation, distribution. Okay, and accumulation and distribution, right? You've all heard those terms. Okay. Now there's 3 settings. 1, you got to enable it. 2, obviously, is the swing filter. 3 is sort of this other one that I like to use is passive traders in control. Because if you're just looking at accumulation, distribution, sometimes you're going to see a lot more than really meets the eye. And this is important. In some markets, you see a lot of them. Okay. Now this is just a way to read the order flow. Okay. Now in E-minis, a market that trades heavy volume, I don't say it's deceiving, but it looks like there's a lot, right? Almost every bar has one. Let me just close this down. If you're looking at this today, okay, you're like, oh geez, what am I supposed to do with this? It's like here, these blue, this is accumulation, a lot of accumulation. Well, that's why I've added this tool here, this other setting called passive traders being in control. Okay, because it's one thing to just to have, good volume, right? But really, when you're looking at accumulation or distribution, it's going to be the passive traders that are showing their hands. Okay, so you can see here now, right? Okay, yeah, you had one here, some selling come in, but you can see it's blue, 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 blue. It's mostly blue. We're going higher this day. Even on the little pullbacks, right? Buy the dip. Well, what's going to give you the motivation to buy the dip? Well, if you know that there's accumulation taking place, you'd be interested in doing that. These S&Ps, sometimes it's hard to find distribution because we just seem to be defying gravity, in the market. This looks like it's being distribution. Obviously, got that heavy volume, 1778, but just wasn't. This is probably some big seller. I was looking at this morning. Market was going down, and this is someone just sort of puked out a position here at 18, and the market ran up from there. But you can see, right, on an uptrending market, you tend to have a lot of those blue zones. Sort of another thing that you could even do, take it a step further, is, again, now if you add a swing filter, again, it's a global setting 5. So if I use the swing filter with accumulation distribution, with a delta breakout, exhaustion prints, if I enable all those, it's going to be linked to this one. You can't, you're not, I don't, people say, well, why is it all linked together? Why is it a global setting and not an individual setting? Because there are a couple of the indicators that do have individual settings. Because it's not, you're not trying to curve fit it and say, well, accumulation distribution with a swing filter of 8, and then exhaustion print with a swing filter of 3, and a delta breakout with a swing filter of 10. No, right? I think that's the wrong way to approach it. That's why we've done it that way. If you were to enable that swing filter on accumulation distribution, again, swing filter will filter out everything else that's not coming in at a swing high or a swing low. Okay, so if you see accumulation and distribution, now you see like practically none. Here's a distribution level from way earlier, but let's just look here during the day. There's a accumulation, some distribution taking place there. There's a accumulation here before that pop up. Here, this blue area, some accumulation coming in. Okay, so when you add the swing filter, obviously you're going to get less. Okay, so that is the accumulation distribution. Now the next one is align point of controls. And align point of controls is simple, right? I wrote about this years ago in my point of control course. It's a sign of, think of it this way, right? Point of control is what? It's the price level in the bar with the most volume. And then if it's consistently the same price over several bars, especially if you're looking at a minute-based chart, well, what's that telling you? Traders are happy to transact at these prices, right? You're going to be looking at them as support areas. Support, that's why it's green, right? Red would be resistance, right? Here's, you even got support here, support here. This one, since it's a point of control one, basically we're looking for aligned point of controls. This one does not have the swing filter on there. I didn't want to put it on there because to me this is more of a visual thing. I want to see how the market is reacting as it comes out of that area. Now, again, depending on the market that you're using or trading rather, for example, let's take a look at I think bonds, where we were March already, so it should be in the June bonds. On a bonds, I like to use a range-based chart. Okay. Now, if you're using a range-based chart, right? I'll say some of these tools perform better, but look at this, right? This is a range-based chart on bonds. Okay, 9 o'clock. There's one there a little bit. After 9, after the market moved, you're seeing strong signal with the aligned point of control here. This one, 4 in the morning, didn't go anywhere. That was 5 in the afternoon. But you can see here during the day, yesterday, 7:50 in the morning, right? So the market makes a nice move higher. Honestly, I didn't even look at an 8 range chart or a 10 range, but I'll just use an 8 range chart here in the S&Ps. I'm kind of curious now. See how it looks. Sometimes when you're looking at a minute-based chart versus a range-based chart, you get not different signals, but the way the bars are formed are much different. So you can see here right on the cash close before we dropped. Obviously, there was bullish. There was a bearish one here, nice bullish one here. It's a bearish one. It didn't just really go anywhere. This one pulled back a little bit before going up to that area. Sold off a little bit. So it's kind of mixed. You did catch some nice moves here and there. There's a nice move down. Although that's right at 9 o'clock, but right before 9, nice move up. So that's the aligned point of controls, okay? And again, it doesn't matter whether you're using a 1-minute chart or a 8-range chart or 10-range chart. Find the tools that help you understand what you're looking at in the order flow, okay? Some people, I notice the ones that are most successful with order flow, right? They pick out a few pieces of some of the tools, right? And they don't add everything. That's not the whole point, right? Is, oh, you got all these tools. Let me just enable everything and go from there. Like, oh, I'm going to enable accumulation, distribution, align point control, delta breakouts, divergence, tails, everything, go from there. No, that's not the point of it. Really, the point is to find the ones that help you understand what you're looking at in the order flow. Okay, that's really the whole point of having these different tools, right? I wrote that book or that course, the Order Flow Trade Encyclopedia, where I list like 128, 130, I forgot what it was, 128 trade setups. Everyone's like, oh my gosh, there's so much to memorize. No, there's not. You memorize, you use the ones that help you understand what you're looking at in the order flow. All right, so let me just go back really quick to just a simple minute-based chart here. And then we'll take a look at the next one. Okay, guys, I see a lot of questions coming in. I'm going to hold the questions until the end. Okay, so buying and selling tail is a existing one. Delta breakout's a new one. Okay, and it analyzes delta. Okay, now people are going to say, well, is this delta breakout the same as a delta surge or delta scalper or this or delta that? No, it's not. It's its own unique setup here. So hang on a second. I think I still got the aligned POCs on. Let's turn that off. Now, what it does is it analyzes the delta. It's looking for growth in the delta, either positive growth or negative growth. Okay, and where's the thing here? 200. Okay, so you could set it at whatever value you like. I find 200 is a good starting point. Okay, and so you're going to see, like here's a bearish one, here's a bullish one. There's a bearish one, bullish one. Okay, bearish one, bullish one. But again, depending on the market that you're looking at, 200 might be kind of weak. Or if I was looking at, say, grains or even currencies, 200 might be too strong. Okay. So all you got to do is you go in there. Again, you got to sort of narrow it down because again, we all look at different types of charts. So people are going to say, oh, can you make a sheet and just say, for every market, what it's going to be? Well, then you guys, okay, well, what kind of chart you looking at? So again, it's a personal journey, right? I mean, if you wanted to make it, 500, you can, right? Say you're trading a 3-minute chart, 5-minute chart, make it 1,000. It's up to you to make it whatever you want, but 200 is a good starting point. So you can see here, right? It's a little bit stronger. So you got a delta breakout here, another one here. All right, here's a little bearish one. Another bullish one. Right, the bearish one. Now, just really quick, again, it might be a little hard to see. I don't. The issue was coming up with the right color scheme for everybody. And then I know people are going to say, I can't see it on your screen in this presentation. I'd have to make it, for you to see it, I'd have to make it like 80 here. But what you can do, okay, another thing you can do is you could add a filter, right? The swing filter, right? Again, it's linked to the global setting. Okay, so I've enabled it. I'm still using, in this case, 500. Okay, so now right? It's looking for delta breakouts, you know, at a swing high here. This one, you know, started to, then went sideways. You know, there was one there. Today you didn't get a whole lot, but again, that's at 500, so it's kind of strict. If I were to step it down to this default, which I think is just 200, let's take a look here. Okay, again, I'm just choosing today's action in the E-minis here. I'm not trying to like go back and find the perfect one and show you. I'm just showing you how it looks. You know, some days are going to be better than others. Okay, here, right? That's your bearish one. This is your bearish one. It's a bearish one. You know, we're trending higher today, bearish. So trending higher is like every time someone will try to take profits, they take it, and then the market just goes up. That's 9. So basically, since 8, there was no bullish ones with the swing filter. I mean, if I were to go back to, you know, yesterday, who knows? Yeah, yesterday, not really showing much buys with the swing filter on. But anyway, that is the delta breakout. Okay, so now let's just move on to the next one. One of the other changes we made is that I didn't put it down as any new thing or anything, but the delta divergence. Now this is enabled when you log in, but it's enabled to only show at the high or the low of the day. What we've done is we've added the swing filter, okay? And why is that important? Well, you know, one of my favorite trades is a bullish or bearish ratio with divergence, okay? But it doesn't, you know, divergence in the true sense is going to be at the high or the low of the day, but there's going to be times where, you know, divergence at a swing high here. Does that mean it's not important? Well, you know, it can be important. You can see how the, you know, market hit the high, came off, came back up, went sideways, came back up to the high, and then sold off, right? This is yesterday. Let's go back to today's stuff. You know, you can see this one level from earlier, market came right, you know, this divergence here, right? You can see divergence here, another divergence here, divergence, 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 bullish divergence. Now, the default colors are gold. I didn't change, you know, blue or anything like that, blue for buys or red for sells. If you wanted to, you could do that in there. I'm so used to looking at it as gold color that I kept it that. But you can see here, because, you know, I often talk about recognizing a trend day early is on the back of a lot of failed divergences, right? A market making new highs or new lows, right? Sort of consistently. But let me just go back. Where am I going here? Yesterday. I don't know if yesterday was a good example, but that might be earlier in the week. But imagine, right, if you're looking at divergences that are failing in one direction or another, we don't have a really good trend day per se in this market. Let me try. I don't even know if bonds had them. Let's take a look here. Because, you know, bonds were moving. You know, the S&P's moves. Okay, so let's just turn it on here. Because basically, when you see, you know, sort of a lot of failed divergences in a short period of time, it's usually indicative of some sort of profit taking. You don't really see much here. There's one here, one here, one here. We haven't got back up there yet. But even here, right, you can see how, you know, it's finding a lot of decent turning points. Imagine you short this, okay, you failed, and you short this one, you got a nice move. You go along this one, nice move up. Okay, so you know, with failed divergences, right? If this blow were to break here, I'd probably be looking for this market to go lower. You know, just like here, failed divergence, failed divergence, failed divergence, came down here, you broke it, you just drop the sell stop in here. Okay. But that's one. I don't really consider that a new upgrade, but it was just something that I had been wanting to have done for a while. But we've put it in on this version. Now let's just sort of get back to the next one. And I'm just going in alphabetical order here. So I'll turn that off. Delta tail is a new one. Again, it's Delta tail, for those of you that are not familiar with my Delta trading course, is basically you have a bar, right? A green up candle that has negative delta on the bottom price level and positive delta all the way up. So sometimes it's hard to see on a footprint chart like this. If you were to make your chart a delta footprint, it could be easier to see. So let me just, but the beauty is you don't need to be looking at a delta footprint here, but to make it easier to explanation for those of you that aren't familiar with it, I'll just pull it up here really quick. So the delta footprint, right? It looks at delta on the bid and the offer, right? So you can see here. So I can see this is positive delta, this is negative delta. So it tells me this is a delta tail. It's coming in at the top. It's a red candle. So what's happened is aggressive buying is being absorbed. It's a sign of near-term absorption, okay? And you can see here, here, here. There's a couple that didn't work. Right here and here, one right after the other. A couple more here, 1, 2, 3, 4, 5. Excuse me. You can see the market coming down. Now, with this, also, say you're looking at it and you say, oh shit, Mike, that's just too many signals. How am I supposed to deal with that? You could filter it out with the swing filter. Okay, so you just enable swing filter. Give it a second. Now, again, just really quick, right? Bonds, 4-range chart. Kind of curious. What I'll do is turn off this other stuff. I had aligned VOCs on here. Turn that off. Delta break, delta tail. There we go. Well, this one I won't use. I won't use the swing filter. You see here, boom, 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 boom. All right. Up, up, down, down, up. Again, this one's with the swing filter on. I don't know if there's any. There's none on the S&P's weird day. Oh, that was yesterday. Let's go back to today. This one, these little signs here, this is from the stacked imbalance. Again, this would be a tail, this would be a tail, but we're using the swing filter, so it's not filtering any out at a swing high or a swing low. So again, if you're using a swing filter, depending on the market, you may see some things, you may not see anything. Okay, so you see on the S&Ps, there's none, but in bonds, without the swing filter, you're seeing some nice trades. If I were to turn off this swing filter, and I could see a bullish one here. Depends, right? You got to find out, which ones you want to use with a swing filter or not. Delta tail is probably one. Yeah, if you probably don't want to use a swing filter. I mean, if you're trading at night where it's a lot slower and volume's a lot lesser, yeah, then you'll probably want to use the swing filter. But if you're during the normal trading days, the US hours, right? You want to be able to take advantage of these moves here, 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 right? This one here, right? You see these bullish moves here, here. All right, let's move on here. So I'll turn this chart back to a footprint, normal bid-ask footprint. So get out of the delta mode. And all right, so that was, what was that? Delta tail. Yeah, exhaustion prints, existing one, but we've added the swing filter. Now imbalance reload. Okay, there's no swing filter on this. And what it is, when you look at imbalances, right? Traders look at imbalances, they look at it on a bar by bar basis, right? Because we're always looking for, the stacked selling imbalance, right? Or a stacked buying imbalance, right? Or we're looking at where it comes in on a bar. But there's times like here, right? You got one bar buying imbalance, and the next bar buying imbalance at the same level. Well, it sort of has sustained trading coming in, right? Because imagine what happens, right? This bar goes, you got the aggressive buying, they move it higher, market pulls back, aggressive buyers coming in at that same price. Okay, this was a bearish one here. Again, normally we look at imbalances, we're just looking for stacked imbalances or big imbalances in the bar, but we're not looking at sort of the sustained buying or selling. Now with this one, you got to be careful, okay? Because especially like if you're looking at it in, here, 6:30 in the morning, 28 contracts, 28 and 70, right? 20 and 94, 22, 41. Ideally, you want the volume to be, legitimate, some strong volume coming in, okay? You don't want to just pick light volumes, 36, 71. You want something pretty strong, ideally, 300, 321. Right here's 454 and then 23, would I like it? Yeah. I prefer it this way because I know I got strong selling that's being sustained, strong aggressive selling that's being sustained. That is, over time. This again is looking at today, 263, 491, even this bar had 201, right? Sustained buying, sustained aggressive buying here. There's some selling, right here. Next one, just move along here. So I'm trying to go quickly because I don't want to keep everyone on a Friday afternoon. Okay, so that's imbalance reload. Imbalance reversals, existing one, inverse volume imbalance, market sweep detector, market weakness detector. Now we've added swing filters to all of these. Okay, I particularly like, one of my ones that I like to use the swing filter on is market weakness. Okay, so you're looking for, because again, why would you want to use a swing filter on market weakness? Is because, imagine a market's coming into a high or to a low, and buying or selling is weakening. Okay, I don't know if there was any today, but here, right? I'm just scrunching this chart to make it a little bit easier to read. Here was a bullish one here, right here. And again, you could adjust what you look back period, sort of the swing period that you want. There's one here, not the strongest pullback. There was one here. Doesn't, this was on the reopen the other day, but you can see that. Imagine if you're buying it 87, right? Gets all the way up into the 90s there. Okay, so there's a nice one here. This was the other day. And again, you don't have to use the swing filter, but it's there for you now. Okay, and I do think you have to put what's happening in the market in context, right? And that gives you the ability to do that. All right, open point of control. Now, this has its own swing period. We call it look back bars. Okay, set to 5. which is what the global one is setting. Again, you could set it higher if you want, 10. Let's just turn it on here. Just sort of go back to where we are today. Okay, so you're going to see the point of controls are either going to be this kind of purplish color or this dark blue. Color them that way because we want you to confuse them with prominent point of controls or anything else. And really what's happening is, again, point of control is what? It's the price level in the bar with the most volume. And you know, if you've studied technical analysis, everything you've read up till now tells you, well, when a market has healthy, if a move has healthy volume behind it, then it's a legitimate move. But the second that, if volume, take it a step further, if volume is going higher and price is going higher, not just price going higher, but volume going higher, that is also a sign of a strong move. So if I see these areas where it's a blue, 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 I know that volume is migrating higher, not just price. Because again, if you're just looking at price going higher on light volume, probably the move isn't going to be that strong. Okay, here. Obviously, this one comes in because someone just puked out 1,700 contracts. But you can see on this move up, boom, 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 right? That's 9 o'clock. But you can just see how volume generally goes higher. You got a healthy move taking place. I've even looked on the bonds, but I'm kind of curious how it looks here. Okay, open POC. I'll just leave it at 5. What was that other thing I had on in here? Delta tails. Turn that off. Oh, there's the bonds. Boom, 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 boom. Catch this move. What is that? 12. It's up to the figure. It's a nice move to catch. Even on the way down here this morning, right? Again, is a minute-based chart in the E-minis wise to trade? I show that because a lot of traders use it. I have markets that I like to trade, and a lot of these tools work nicely with that. So if you're trading bonds on a 4-range chart, take a look at open point of controls. Now the next one, whoops, this is bonds. Let's go back to E-minis, is the order flow gaps. This is a new thing here, so let's find it here. Turn off open point of controls. Turn on gaps. Now with this one, order flow gaps, if you're not using the swing filter, you might see a little too many for your taste, which is, again, for some people, they're probably cool with that. Maybe, I don't know. And default is fixed. You can actually draw it out until tested if you like. If it's fixed, it'll just show the gap between the two bars here and here. I made it this darker color just for people to see on this presentation, but it's a lighter blue and a lighter pink. Now, what I said is you can use the swing filter on this and it becomes much more effective, in my opinion, as opposed to just every time there's a gap there. And where is it here? Swing filter again. Default setting up here is 5. It's under the global settings. Give it a second here. Again, it's got to do quite a bit of calculation. So you can see here, bullish. All right, a couple bearish here as we're getting up to these highs. There's a bearish one, bullish one that just went sideways. Bearish here, bullish here. And then that's going into the cash close. Even if you go back a little earlier, bullish one here, obviously on the back of this bearish one, you got the bullish here. Where you're going to place your stop, obviously, is going to be below the first bar where the gap appears. Just as here, if you're short here, your stop would be up here. By this one, your stop would be below here. That's today. If you go back yesterday, I'm not going to say, yeah, you could take advantage of that, but there was one there. There's going to be times like this where they just don't work out. Okay. So again, you can see these, bullish one here, this one sideways. That is, I'm kind of curious here on the bonds, since I like to flip through these markets real quick. Take a look at bonds with it. Gaps. Use the swing. I don't even know if I need the swing filter, but turn off open point controls. Try it with the swing filter. I don't know how it looks here. There's bullish one here. There's a bearish one. Let's go back to today here. There's a bearish one here. There's a bearish one here. There's a bearish one here. Bullish one here. Bearish here. So you got, going back to midnight, bearish, bullish, bearish, bullish, bearish, bearish. Okay. That's the order flow gaps. That's a new one. Now let's take a look at, I think the next one is okay, so disable this sequencing. All right, we added the look back. Ratios already went over with. Price action divergence. Okay, now this one. This was sort of a last minute one that we added literally just earlier this week. It just sort of snuck it in there, but when you have a green candle, right, an up candle, right, you generally have positive delta, right? If you've got a red candle, you generally have negative delta. Okay, but there's times where the market is going up, green candle, green candle, green candle, and you got negative delta. That's what this looks for. Okay, well, why is it going up on negative delta? It's because you got strong passive buyers bidding up the market that are absorbing whatever aggressive selling is taking place. Okay, let's write on the cash open, but you can see here, right? You got the green candle, negative delta. So I was drawing that green. Here, you've got red candle, positive delta. So there's supply up in here. Okay. Yeah, you here you're going sideways, right? Between here and here. You get long here. Okay, it doesn't work out, just goes sideways on you. Then you get the short signal right before the market dropped. Got a divergence here, but didn't go anywhere, right? Next bar just doesn't even go any higher. There's a bullish one here. Sort of came back to that area. Nothing in there. These are just stacked buying and selling imbalances. I should have turned that off, but you can see right here, new high, swing high, 97, red candle. Why? Because you got absorption taking place up there. This one failed. This one failed. This one worked. But that's at 8 at night with kind of thin volumes. Let's go back to sort of the day session today. Okay, cash open, ran up, right up here, you got a divergence, right? Positive delta on this red candle, 44. Right here, you got a divergence. Okay, so bearish, bullish. It's a bearish one that failed. Bearish one, bullish one. Couple of three bullish ones here, here, here. This one had a nice little move. This one, not so much. This one, okay. Another bullish one here. Another bearish one here at the cash close. Now, again, I highly recommend use the swing filter. If you don't use the swing filter, you're gonna see a lot, honestly. So I'll just disable that. Kind of curious on bonds. Let's look at the bond market here real quick with it. Where is it here? Turn off gaps. Well, for this one, since this moves differently, I'll just leave the. So you can see, right? If you have it turned off, right, you see a lot. 1, 2, 3. Right, you see bearish ones here. But on the E-minis, you're gonna see a lot more, right? Almost, and it happens with regularity. You see 1, 2, 3, here. Here it's interesting because you can sort of see areas where the market is kind of being supported. Here. You do get the odd red one in there. But if you're looking at it on a bar by bar basis, it's pointless, right? Because it's hard to really, there's no context to it. That's why I recommend using the swing filter. Okay, so let's moving on. What was that? That was price action divergence. So slingshot is an existing one. We've added the swing filter to that, but let's talk about this one, POC wave. Okay, that's a that's a POC setup, 3 bars. You start with bar 1, which is like the neutral bar. And bar 2 has a lower point of control. Bar 3 has the higher point of control. Let's just find one where there's basically at the sort of same levels. So you can see here, right? So first bar neutral, it's green candle, then red candle, higher point of control. Market started going up, traded some volume, then starts coming down. And as it comes down, it's got a lower point of control. So point of control, then red bar, higher and lower point of control. Just as red bar, green bar, lower point of control. Second green bar, higher point of control. Okay, here, 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 and here. But really, again, I know a lot of traders are using this with other tools, other forms of analysis, but I don't even know if they've thought about looking at it with a swing filter. And I know guys that are using this, like when market comes up to a level and they see a POC wave take place at that level, it's like go time. But you can also trade it by itself with the swing filter, here. Oh, sorry, that's early morning, going the wrong direction. So that's a bearish one there. Okay, another bearish one. Kind of went sideways. Nothing bullish today. There's a bearish one. Bearish. Bullish, just sort of went sideways before it went up. Bearish again. Today was Friday after a long freaking week. But how does it look on the bonds? Let's take a look here. So turn off this divergence. I'll just leave the filter off. Okay, so you see bullish one here, bearish, bullish, bullish, bearish, 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 bullish, bearish, bullish, bearish. Again, that's with the swing filter off, so you can see everything. If you have the swing filter off, you'll see them all. If you're using the swing filter on, you'd see this one, probably this one, this one, this one, this one. So it's up to you if you want to use the swing filter. Yeah, I like to use the swing filter. I like to take trades when we're coming up into a swing high or swing low, because to me that's a sign of an area that you can reverse, right? Because that means if you're trading a reversal, you want to have a move to reverse, period, right? If the move isn't going, how are you going to trade a reversal? And from reversals, that's where you could get very nice moves. Potentially, you can reverse and go to the lows, or reverse and go to the highs. So to me, those are the opportunity times, opportunities knocking. Are you going to take advantage of it? All right, so prominent point of controls, no change there. It's all the same. These have their own look back swing periods. We call them look back bars. Resting liquidity. Okay, there's two types of liquidity. There's resting liquidity and there is vertical liquidity. Okay, resting liquidity is horizontal. Vertical is, think of vertical as stacked. Let me turn off the stacked imbalance. Okay, so where am I here? Resting liquidity. Okay, now again, this one has a volume threshold. Depending on the market that you're trading, you may need to adjust it and the time frame you're trading. Again, 200 is set for E-minis. And what it's going to do is going to color the volume areas in black, and it's going to draw the text a little bit stronger. You see in here, all right, 15, and it's going to be bold. Okay, so you can see here, all right, these are areas of resting liquidity. All right, bearish is going to be this sort of this red color. Bullish is going to be this green color. Okay, and it's measuring it over time. Okay, now there's ways to trade it, right? I like to look for, because again, it's volume basically is what it is. I'm not going to say it's some big fancy algorithm. It's volume spread out over bars basically. And you want to take advantage of it as soon as possible. Again, so whether you're using a minute-based chart or range-based chart, it's best, used quickly, right? Any order flow is best used quickly, right? And again, when you're looking at it, ideally you want to take it as soon as possible. And that, like here, people say, well, you said there's resting liquidity here, I got long. Well, yeah, but there's resting liquidity all on the way up. You came in late. It's like people that bought, Bitcoin 3 years ago at 60,000, they're up 0.2% right now. They had to wait a long time. So if you're buying it at a high price instead of getting in earlier, you're missing out basically. You can also use the swing filter. It's going to filter out a lot of these trades actually if you use the swing filter. And it's fixed. I don't know. You could draw it out until tested if you wanted to, but we have the default set at fixed. But if I was looking at a different market, okay, so this is E-minis. Let's just give it a second to come up here. But if I'm looking, excuse me, if I'm looking at bonds, right, 200, because here you're trading thousands at a price level. Okay, so maybe for sure 200 is too small a number. You'd have to adjust it based on your market. I wouldn't use 200 here. Gosh, 500 is probably too light as well. You probably need to use a bit stronger, but let's take a look here. So here's, not bad. Here's bullish signal, a couple bullish signals. So 500. Again, that's just off the top of my head. Here's 500 here, 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 right? It's taking out that resting liquidity, right? Blue means getting long, right? If there was any, there's these oranges areas you'd be looking to short. Short, short, short. Okay, but let's go back here. This is, with the swing filter. Okay, now with the swing filter here, we did it sort of opposite because you can't look to get long. You're not going to see the volume coming in generally. I mean, here was big offer coming in at a swing low. Generally, as the market starts moving away from a low, and people are offering it out. When you're looking at liquidity, think of it, how to describe it, right? If you imagine for a second, close your eyes and imagine, a heat map, right, with liquidity coming in. Okay, those. If you're looking at a heat map, right, you see the bars coming in, here, right, and I mean, some traders will see liquidity coming in here at 25 and think I gotta get short. But what happens when the market eats through that liquidity at 25? It's probably going higher. It's going to look for the next area of liquidity. Just as this market is going higher, takes out that liquidity, where's it going to go? To the next part, the next point of liquidity. Now this is volume that actually traded. Okay, so we're measuring the liquidity that actually traded and saying, hey, that's important. Here, here, here. You don't need to wait till the third one to be getting long. You'd be getting long after the second one, or sorry, after the first one, before the second one even takes place. Just as here, market's going down, it takes out liquidity here and here. No, it's during a data release, but and that's during the cash open. During the cash open, generally you're going to see liquidity pick up anyway because you're seeing a lot of orders come into the market. But hopefully you get the idea there. All right, so let's take a look at the next one. I'll get to vertical liquidity shortly, but I'm just going through these alphabetically. I don't want to skip any of the new ones. Retail suck. It doesn't mean retail traders suck. It's basically, think of it as retail traders getting sucked in to bad positions. Okay, I'll show it to you with swing filter disabled, not enabled. This color scheme is kind of new. It's like this chartreuse here and it's sort of magenta, but let's take a look here. Okay, let's go back. Okay, so like here this morning. Okay, bullish, bearish, bearish. There's a bearish one from earlier. It's basically looking at the order flow in the bar and seeing that, hey, you know what, right? The lower, volume was increasing on the way down, right? Basically trap traders, here. Right. Now, one thing I like with this one is, again, something like this, because the volume decline is this is very similar to it. So you're going to make a swing filter. Again, this is a minute-based chart. Minute-based charts, things look different on. If I was going to show you a range-based chart, it would look vastly different. I'll start here. I don't know if there's any signals today. There's a bearish one. Market just went sideways. Yeah, that was it. On a range-based chart, let's go quickly on an 8-range chart. This is our trusty bond chart. Let's take a look, add it to the bond chart. Is it here? I'm not going to enable that. Disable the stacked imbalance. Okay, here. Here. Couple ones that didn't work out here. This is the resting liquidity. I didn't disable that. That's a nice move there. This is a beautiful move here, obviously. Let's take a look here at the E-minis. That's right before the cash close. This bearish one went sideways. It's a bearish one here. Some people love to use range-based charts because it takes out the time element, right? It's just based off of price movements. Okay. There's none in here. Okay, here was one here. Where's it's interesting where the market comes back up to there. There's a bullish one there at 8:30. It's another bullish one right here, a couple days ago. But anyway, that is the retail suck. It's basically traders getting sucked into bad positions. It's another way to say trap traders. Stacked imbalance, don't need to explain. We did add the swing filter on there. So if you're looking at stacked imbalances at a swing high or swing low only. Same with thin prints, we've added the swing filter. Value areas, no change. There's no swing filter to the value areas. Every bar has a value area. You're not just going to look for bars that have a value area to swing high. I mean, every bar has one. It's based on volume. Same with engulfing value. Now, vertical liquidity. Okay. Let's just enable this real quick. Excuse me. Okay, just give it a second here. Okay, so again, this one is volume dependent, right? You see a lot of green strips up, red strips down. Okay. Think of it as stacked liquidity, stacked volume, okay, over a certain amount, basically. Again, depending on the market and the chart type, this is an 8-range chart. It's volume dependent, so you're going to have to find it on find the volume that you want to use based on your chart type. Again, not everyone uses the same chart type. Okay, we all use sort of different chart types. Okay, so this is on a time-based chart, right? You don't see as many, still see them here. Okay, now if you could adjust it, maybe 200 is too light for you. Maybe you want a stronger volume. Where is it here? To be honest, 200 is kind of light. Maybe you want to make it 400. Okay. You just change it, right there. Now, cluster size is how many levels it is. 1 level, 2 levels, 3. 3 is, quite strong. Okay, so you can see there was one here, a couple in here. Again, towards the cash open, you're going to get a lot of volume both directions. So I'm not surprised to see this bar's got 2. Here's the one's got a few. There's another one got a few. There's another one got a few. You see this market is going up. There's a lot of liquidity that's being removed from the market. These are coming in at subsequent higher levels. Okay, so if you, one of the things you could adjust. Okay, so I set it at volume at 400. Okay, you can adjust how many levels. So say you want to set it at vertical liquidity, so 400. Change it to 2. So it's only got to be, 2 subsequent price levels, 400 or more. But maybe I'll let's keep it at 400. Okay, and hit apply. Obviously, there should be more because we lowered the threshold by 1 price level down to 2. Okay, so you're seeing in here, right here, there's a lot more, right, coming in. But what you can do then, right, if you're going to go that route, is what you can always do is add the swing filter. Okay, what am I doing here? Apply, I'll hit OK. Okay, so you're looking, actually I gotta double check this swing filter on this one. You may have it programmed the wrong way. Yeah, nothing's coming up. But anyway, I'll have to get with my program on that, make a note there, swing filter on vertical. Liquidity. See, he should have made it the same way as the rest of the liquidity one. I think he's still got it programmed the other way around backwards, but we'll get that sorted out. Don't worry. All right, so let's move on to volume decline. All right, volume decline, simple one, sequential decline. You've all heard of that probably. You know, it's decreasing volume on the way up of a red candle or decreasing volume on the way down of a green candle. Although in the old days, you know, they used to say on both ends of the candle. They didn't care. But I sort of refined it to being on a red down candle, you're looking at these 3 price levels. On a green up candle, you're looking at these bottom 3 price levels. And oftentimes you do have a lot of bars exhibiting that, okay, which can frustrate you, okay? But again, that is something, because if you're looking at volume drying up or getting weaker on a move, you want a move to happen, right? That is why you add the swing filter. Now we have the draw mode as fixed. You could actually keep it fixed or you can draw it out until tested, right? When the market comes back to that area, you know, an area that traders were, you know, sort of getting away from. What is going on now? Here we go. Here, 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 right? If these were fixed, sometimes it's a little easier to see. Well, these are fixed, but if these were until tested, rather, that'd be a lot clearer. Let's make this a little bit darker for you guys to see. And again, you know, whether you're looking at bonds or S&Ps, let's take a look here at this one. Where are we here? Volume decline. What was that other one I got on there? Take you off here, and I'm going to take off the rest of the liquidity. You see here, right? Bullish, 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 bearish, bullish, 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 bearish, 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 bullish. All right. Bearish, bullish, bearish, 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 bullish. This is it with the zones drawn out. So you can see here, 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 right here, right? And then obviously the cash close. Let's take a look here. I think that's the last one. Made it through. Volume decline. Disable U. Volume imbalance. We set it so that you could enable the swing filter. Okay. As before, we didn't have the swing filter on here for multiple imbalances. I like to see multiple imbalances at swings, swing highs or swing lows. And so you just enable the swing filter, enable multiple imbalances. Zero print, unfinished business, that's all the same. There's no change to the ladder contents. Summary contents is all the same. Volume profile is all the same. So let's see if there was any here today. Multiple imbalances at swing highs or swing lows. There's multiple selling imbalances here and here. Buying and selling there. That was today. So that 9 o'clock time, some goofy shit happened. It's a bearish one there. Bearish there. Again, that's a minute-based chart. If you're on a range-based chart, just take a look here. And the thing to note with that one, the volume imbalance, it's linked to the global setting for the imbalances of, depending on what you're using. The default is set at, let's just take a look here. 4 to 1, 400%. Okay. All right. So again, this is what it looks like on a trending market. Profit taking, profit taking, profit taking. There's a bullish one there, bullish one here. There's a bullish one here, a bearish one up here, bearish one that didn't work. It's a nice bearish one right there. But anyway, let's take a look at some of this other stuff. I think that should about do it. Zero print, no change, unfinished business. Summary content's all the same, volume profile. Yeah, that's all. Just really quick here. Where am I here? If I'm going to go take a look at some questions, if you want to know more about it, just go to this page, oft7.com. OFT7, the number 7, right? And you can scroll down here, right? It talks about all the new, here, you get down in here, accumulation, distribution, open point of controls, aligned, gaps, reloads, volume declines, PLC wave, liquidities, delta breakout, retail sucks, retail sucks, the retail suck. I should really put the in front there. Price action, divergence, etc. Then, the existing ones that you still get there. For those of you that don't have it, you can get it down here. We've actually added a new bonus, the workshop that we did in October as well. It's still $7.49. I'm getting a lot of pressure from my people to raise the price. So if I keep it at $7.49 for a week or so, then it will probably increase to, I don't know, $8.49, I think is what they're talking about. But anyway, I'm going to burn through some questions here.